darlings, and welcome back to the Tea with B podcast. I am B, and here we spill the tea on absolutely anything. Now, it's a little bit later than I wanted to, but we are back for a favorite part 2 about crypto regulations. Now, I am passionate about crypto because I think it is the future and it's important to be educated on the matter. And with everything that is going on, we have our favorite expert. I'm so excited to introduce Garrett Engel. Welcome back to the show. Garrett is a lawyer, he is an accountant, and used to be a miner. He's been in this industry for a long time and he definitely knows what's going on. Welcome back, Garrett. So stoked to see you.
Yeah, thanks for having me. I'm excited to be here.
I'm excited too. Now, a lot has happened since we last spoke, as it always does, because it changes overnight. But let's kind of get into some of the stuff that's happened most recently. And I hate to start out another segment with a company going down, but let's quickly talk about what happened with Celsius. They just filed for bankruptcy. So if you can just quickly go over what happened and what it kind of means for the market.
Absolutely. So basically with Celsius was actually a lender for different cryptocurrencies. So they would custody people's crypto. And what they would do is they would give these massive loans to institutions. And then in return for these loans, they were giving certain institutions, they were charging like particular interest rates. And those interest rates are how they were theoretically paying someone like me or you who went in and said like, hey, I'm going to stake my cryptocurrency with Celsius, my Bitcoin. I'm going to get certain, some sort of APY each year on that. And then they were just charging like people like FTX or Meta, their basically like their crypto investment arm, different, like really, really high interest rates. And then they were paying those out. But the problem is that when a lot of their creditors started to not be able to effectively make the payments on their loans, Celsius ran into an issue because they also had taken out loans. And a lot of those loans were driven by smart contracts, which is really, really interesting because they ended up having to pay down their Bitcoin liquidation consistently on the blockchain, as opposed to going through the traditional markets where you would have to get like lawyers and stuff involved. Eventually though, with Bitcoin's price continuing to tank and a lot of their creditors not being able to effectively make those payments, they ran out of cash flow and effectively they filed for bankruptcy.
Which is unfortunate, and that seems to be happening a lot because, of course, the price of Bitcoin has dramatically dropped since about January or February. I'm not really sure what it's down to at this point, but I think it's about 60% down, which, there's both sides to it, whether it's a good thing or a bad thing. But let's get into it in the sense of Celsius just filed for bankruptcy. The price of Bitcoin is down, which we won't talk because we're not here to give stock advice. But it seems that the news is portraying, although the crypto market and the blockchain market is completely crashing, but there continues to be exciting events and all over the country and all over the world that are still happening. Most recently, you went to Consensus 2022, and those are still happening. So tell us what happens specifically with Consensus 2022. What is being discussed in these kind of meetings, and what are people that are in the market that are privileged to the information, what are they knowing about what's going to happen next, and specifically what's happening with regulations?
Yeah, so one thing that was really, really cool about Consensus is that it brought subject matter experts from all over into Austin. And some of the things that were most interesting to me were up sort of like the alley of the regulatory regime that's going to be introduced. So for example, Senators Lummis-Gillibrand and Pat Toomey, less Toomey, but they basically developed a comprehensive framework for how cryptocurrency regulation, they would like it to be dealt with going forward. And I want to say they spent about a year drafting this legislation, but they were just one of the many different main stage talks that when it came to what sorts of things what direction is cryptocurrency moving in the US, sort of what direction is it moving worldwide, because there's also different regulations that are sort of coming down the pipe as far as like in the EU. in how cryptocurrency is viewed differently here in the US versus the way it's viewed in the EU versus the way it's viewed in other countries like Australia and things like that, which is really, really interesting. There were also tons and tons of decentralized finance or DeFi protocols that were actually there that if you had, like, for someone who keeps up with the space, you would see sort of, you'd be able to put faces to names that you might have seen just on the internet. Like, for example, I got to meet Chad Barriford, who's one of the founders of one of the projects that I like to follow called Thorchain. And it was as down to earth as literally running into him in a restaurant. And then my buddy being like, hey man, look, there's Chad. And just like turning to him and saying, oh, what's up, man? Like it was really, really cool to experience that these developers are just normal people. They're just trying to go about and introduce technology that they truly believe is going to change the world into the space. And so I found the whole experience, not to mention it was kind of like a giant party in many respects. And I'm not going to complain about that. And that makes sense given what it costs to actually go to the conference. And I was like, oh, this is where the money is being put towards, which makes sense. So.
And I'm glad that you actually brought that up because, again, I like to point out people on the outside, you know, you watch any other news outlet like CNN or MSNBC, and a lot of them are talking about the downsides of crypto. But even this past weekend, I know that Avalanche had an event in New York. So I guess the question again is, for you, you're an insider, and I love that you're being a fanboy to someone who's in the blockchain, who's working for a project that you love. But what's the consensus amongst the people that are attending these events? Are they optimistic? How are they feeling about the wave that's coming?
I would say definitely optimistic. Bear markets are for builders, right? That's kind of something that's pretty common in crypto. And I think that, sure, there were definitely people there who were disappointed because obviously the market has been going down for a little bit. But ultimately, the vast majority of attendees were probably people who are developers, or if they weren't a developer, they were someone like me who has a significant interest in the space and can provide value from like a legal perspective or maybe an accounting perspective or a finance perspective. There were a lot of venture capital funds that are interested in getting into cryptocurrency or different protocols. Could be that there was private equity, there was hedge funds there. I mean, I was meeting people from all over traditional finance, looking for just anything they could. It was great. I felt like every conversation I had, there was always a group of people where like one person kind of knew a good amount about cryptocurrency, whereas like the rest of their group was kind of like, I have no idea. I'm just here to explore and learn and figure out, is this a space that we want to be in? And I think that's one of the biggest reasons why I'm personally bullish on crypto from a macro perspective, or just blockchain and digital asset technologies just generally, is because there's seemingly all this sidelined money from different firms, but they need regulatory clarity. And I think that in the US, we've in the past sort of muddied the waters a bit because we've kind of ran into this enforcement by regulation by enforcement sort of issue with the SEC. But now, given the different sort of approaches that senators or Congress folks are taking, I think that we're going to see a lot more clarity, which is then going to draw a lot more of institutional money into the space, which I think that's the biggest step required in order for the random person to say, yes, I have a portion of my retirement funds allocated to Bitcoin or some other cryptocurrency. And it kind of all starts there, right? Congress has to really step up to the plate because right now the SEC has just been sort of shooting from the hip and going after various different firms. And I think that's bad for the space, but what the direction the space is going, I'm very optimistic about.
That's right. And I love that you brought that up because that's so true. People who are kind of the OGs in the space, who have been around since, 2010 and 2008, the super, super early starters, they may not be as happy about the regulations, but you're so right. In the end, it does bring clarity to the market, which is very, very important. And people can have a little bit more assurance putting money, something that is, backed essentially by the government to some degree. Now let's talk, you kind of brought it up, and that is a bipartisan plan that is with Lummis and Gillibrand, who are both women. I love that, from Wyoming and from New York. They have the Responsible Financial Innovation Act. which is they are claiming, and I'm going to read the quote exactly, it's the most substantial and comprehensive bipartisan effort to provide certainty and clarity to the growing digital asset and blockchain industries. Now that kind of sums it up, but Garrett, could you explain a little bit more about what this bill will do, what kind of clarity it will provide or won't provide, and as well as how the time frame for this will work and how soon it will be implemented, if it is?
So basically, I think in order to best understand how this legislation could impact the industry, there needs to be a bit of a foundation laid on sort of why is this legislation needed. And it kind of goes back to what I was saying about the SEC regulating through enforcement. And what I mean by that is right now, there's no framework for whether or not a cryptocurrency is what's thought of as a security by the Securities Exchange Commission. And in order for something to be thought of as a security, typically the test is called a Howey test. And effectively, it's a 4-pronged test that the Supreme Court came up with effectively 100 years ago that says, is something considered an investment contract? Because in the Securities Act of 33 and 34, a security is defined as it can be some ownership in a company, or one of the examples is an investment contract. Is a cryptocurrency a security by defining it as an investment contract? If it is, then what happens is you have tons of these cryptocurrency firms that have effectively been running foul of securities regulation laws in the US because they weren't providing enough disclosures to investors. They were letting just anybody invest, because the way the laws are currently structured is that you can't just walk up to any business and buy a share in that business. That's how it used to be before the Great Depression, but that's what ended up effectively causing the Great Depression, was this wild west type approach to investing in different companies. So the Howey test effectively says that, is there a group of people investing money in a common enterprise that's dependent on effectively the actions of others? And that is sort of the framework that the SEC has been doing when they're suing different cryptocurrency firms. They're coming in and they're saying, hey, look, your crypto, whatever it is, satisfies the 4 prongs of the Howey test. Look, I mean, people have to invest their money in a common enterprise based on your efforts with the expectation that they're going to get money in return. Well, that's literally the definition of an investment contract, which means you're selling securities just willy-nilly on the internet, and that's not good. What this piece of legislation does is it takes a step back and provides a framework and says, well, how about we don't have the SEC manage most of cryptocurrency, but instead let's set up the CFTC to do it. Because right now the CFTC manages derivatives, and especially they also do, it's the Commodities and Futures Trading Commission. There are 2 cryptocurrencies right now that are effectively considered a commodity: Bitcoin and Ethereum. Ethereum is still a little bit not necessarily 100% considered a commodity, but the previous commissioner of the CFTC, Heath Tarbert, I believe is his name, he said that he viewed Ethereum as a commodity, which then when something is viewed as a commodity, the rules are significantly more flexible because the mandate of the CFTC when it comes to consumer protection is a lot lighter. I guess you could say that it's a lot more diet versus like the SEC is significantly, it's much more strict. Mm-hmm. This legislation is setting out, okay, look, if a crypto company or a DeFi protocol developers, they want to develop a cryptocurrency, what are the different areas that they would need to be concerned with? Well, one is that, are they a security? Which regulatory body would actually be over them, supervise them? Who would they need to make these disclosures to? What are the tax implications of of buying and selling this cryptocurrency? What sorts of consumer protections need to be in place? I think that with this bipartisan effort, like I mentioned before, this is definitely the first step in a series of steps in order to get us to a clear, or I guess I would say certain regulatory environment where you can see sideline institutional money come into the space. As far as timeline goes, especially given what I heard at consensus, both, in fact, all three senators did not think that we would see this legislation or a variation of it hit the Senate floor this year. Their best guesstimate was probably next summer, so summer 2023. But they did say that they think that we'll see stablecoin legislation coming out before that. And I think that given the various mandates that the Biden administration provided through the executive order a few months ago to do this research to figure out, do we want a central bank digital currency? What are the pros and cons of stable coins? What does the regulatory environment need to look like on stable coins? Because once we get that, because remember, stable coins are effectively the foundation of DeFi, because crypto didn't really explode until people had the ability to enter and exit investments without actually exiting cryptocurrency. Well, part of the big crash in 2017 to 2018 was that if you wanted to get out of crypto, you had to literally flee all the way back to your bank account. Well, now you could actually just sell to some stablecoin like USDC or UST, Terra, rest in peace, but something like that, right? This stablecoin legislation, which is not made public as far as I'm aware. I mean, they were just discussing how there's just drafts being written up right now. It'll also deal slightly, I believe, with like algorithmic stable coins. And I think you're going to see that algo stables are not really something that the US government takes kindly to, especially given what happened with Terra USD. However, that doesn't make me bearish on stable coins at all. I think you're going to see collateralized stable coins completely are given like the green light, basically, as long as they meet certain criterion that is set out by the regulatory framework. And the more certainty we get with stable coins, then the government can move, the Congress can push forward legislation on just crypto generally, developers, and the relationship to the public in general. I think you're going to see a big connection between cryptocurrency as probably the riskiest asset class, but definitely an asset class that is actually viewed favorably by the government and something that people at large will start to engage with. And they won't just have to buy SafeMoon by using their phone or something like that and going through like sketchy pancake swap. I mean, you're going to see a lot more structure comes to the space. And I think that's going to be really, really good.
Absolutely. And I mean, I love that you brought up stable coins, because that was going to be my next question, because there does seem to be a lot going on with stable coins, and algorithmic stable coins obviously have not done very well. And I know that there's a lot of people in Congress who are trying to attack that issue so that other people don't unfortunately end up in the same situation as Terra. Now, Garrett, seeing that you just answered my question when it comes to stable coins, you already mentioned that you're bearish in the market, even though you're bullish, even though the market is bearish right now. Now, I've said this a million times that I definitely believe in blockchain technology, especially when it comes to financial institutions. I just feel like you can't look at a financial institution and not understand how having a blockchain would be beneficial. But talk about what people should do right now. You said that a lot of this legislation, regulations, we won't even see until about a year from now. So what can people do if they're still interested in crypto? They're interested in finding out which blockchain projects are good, which ones they should be investing in. So from someone who is as bullish in the market and has been around in it for as long as you have, what are your recommendations for people to do right now?
Well, I can't give any investment advice.
Exactly. No investment advice ever. Just in terms of education, what should people be doing?
I think that if you're just stepping into the space and you really want to understand, like, okay, what is cryptocurrency just in general, and then sort of because you need that foundation first. You need to have a strong understanding on, are all cryptos cryptocurrencies? What's the difference between the technology behind Bitcoin versus Ethereum? What's the difference between proof of work versus proof of stake? why are there these particular narratives like in the space? Because, for example, right now Ethereum is a proof of work cryptocurrency, but the merge is going to turn it into a proof of stake, which proof of stake has its cons, but one of the pros is that it's significantly more energy efficient. And from a regulatory perspective, one might think like, okay, it's pretty easy to find some people who make arguments against Bitcoin because it's bad for the environment. If you're really concerned about things like climate change and stuff like that, or green energy, you aren't going to really like the fact that there are people mining Bitcoin and using all this energy all the time, if that's the only slice of the image that you like look at. But that's actually more common than you'd think. Proof of stake effectively addresses that issue because it's no longer like consuming energy in the same way than proof of work, where you have to mine different miners or graphics cards for Ethereum all day, every day, and constantly consume energy. I think having a great or a strong understanding of those types of issues, what is the difference between Ethereum and AVAX and Terra and Atom, right? Like, what are these different cryptocurrencies trying to accomplish, and what makes them different, and are they accomplishing what they say they're accomplishing? Because you can see there are cryptocurrencies that have been around since 2015 that haven't made much progress. And I think an example of that could be, at least from some people's perspective on Twitter, it could be like Cardano. That's something that is very creates schisms in the cryptocurrency community, because you're either an ADA or Cardano bull and you think, oh no, like this is the next big thing, or you're someone who's really, really bearish on Cardano because you're like, look, they don't even have smart contracts in the same way that all these other cryptocurrencies and blockchains have had smart contracts for years at this point. I think in that situation, just kind of depends on what your goals are, kind of understanding what is DeFi, where does that fit into the equation, right? I mean, it's great that people can buy and sell Bitcoin, and that's great as a store of value or a hedge against inflation, which I'm not sure if that narrative is holding up, but that's something else that someone should actually do some research on. Why would you want to own Bitcoin versus like Ethereum if you're trying to hedge against inflation? Why wouldn't you just go out and buy gold? One argument that I've seen is that, like, well, gold is limited in theory, but it's still mineable in the sense that we don't actually know with 100% certainty how much gold is out there, like in existence, because people can find more gold. With Bitcoin, you know exactly how many Bitcoins will ever exist, and you can look mathematically how long it will take to get there, which I think is a pretty powerful narrative. Well, someone's saying, well, it's just basically like digital gold in that respect. And that's a pretty provocative argument for people who want to look into Bitcoin. But people who are more into DeFi are going to think, well, Ethereum, once the merge is complete, will effectively become a net deflationary asset. So the amount of ETH that exists over time should theoretically go down every year, which that's pretty interesting, because that means if you own Ethereum, you actually own an asset that there will slowly be less of as time goes on, which in theory should cause the value of it to go up. And I think that was a big argument behind Luna, especially because as Luna was burned, less Luna was being pulled out of circulation. And so people found those tokenomics really appealing, because they were like, I mean, Do Kwon used to say, Luna will eventually become an NFT because there will only be one Luna left, and I'll be the last Luna holder, or something along those lines. So I think that understanding the different narratives in crypto, the technologies, so you can kind of see, okay, I see why these narratives exist, the regulatory environment, so you can kind of be like, okay, do I think that like the regulatory environment is going to become very hostile towards the assets that I own? Like I said, for example, algorithmic stablecoins are probably not going to be looked at favorably by the US government. So I'm not sure that if someone who like did the research, they would want to go out and just like gobble up a bunch of random algorithmic stablecoins. right? Because how do you expect to ever cash out? Like if the regulatory environment becomes clearer and the off ramps to your bank account become clearer, then maybe those off ramps are going to say, oh, you can't, we don't off ramp algorithmic stablecoins anymore. We only off ramp collateralized ones and stuff like that, which would then theoretically drive demand away from the algorithmic ones. So I'm just thinking like these are the different branches of the crypto tree that someone would want to have a good understanding of before they decided to invest their money. I do think crypto is incredibly risky. Like I said, it is definitely the riskiest asset class. It's still up in the air whether or not or how correlated it is to more traditional asset classes like commodities or stocks. And if someone is effectively okay with, I hate using this word, but losing their money in the sense of like almost like gambling, if you're okay with losing it, if it's money that you're okay losing and you fully understand the risks and you actually can appreciate the technology and be like, oh, well, I really like AVAX because I really like what the developers are doing here. I like how they're creating, I think they just came out with their subnet tech and what that's doing. And so that allows the AVAX, the Avalanche blockchain, to be really, really scalable. And maybe if you're like, well, I think Ethereum is great, but it's not very scalable because that's what caused gas prices to go up so much. AVAX kind of does the same thing because it uses the same code. They both are Solidity because they're called EVMs, which is Ethereum virtual machines, right? Which is hilarious. They basically, AVAX is effectively designed to be just a better, more scalable version of Ethereum. So like maybe that would be someone's narrative, but Ethereum has a first mover advantage. So there's just all kinds of considerations one would have to think about when they're deciding to invest any money at all into cryptocurrency. So, and I think that you need that fundamental understanding, and it takes a while to get. And most people who put their money in crypto do not spend the time to learn these things.
Yes, and that's so right. And everything you just reiterated is you have to educate yourself. And right now is the perfect time. With everything being down, it's the perfect time to educate yourself and gain that knowledge and figure out if you do want to put your money behind this technology, because you're right, it is still very volatile. It can seem like gambling. When it's obviously, when it was high, it was a lot different story. But the other thing, and I don't know if you agree, but one of the best ways to also look at a lot of, Bitcoin and Ethereum is don't necessarily think of it as currency, think of it as a country, because it has different things that's going on. On Ethereum, you can build more things. Bitcoin is the OG, but it's a little bit slower. There's different aspects that go into it. And right now is the perfect time to learn. And one thing I also wanted to add, to look at some of the downsides when it comes to Web3, to blockchain, and to crypto. A great resource to check out is Web3 is Going Great by Molly White, I believe, but she has a lot of really great insight. So you should see both sides and really figure out, and I love what you said, do not invest any amount that you're not okay with fully losing. You have to realize, and this is why we are educating, because there's still volatility in the market. There's still not full regulations. So you have to still be careful. And I love that. Thank you so much, Garrett. Garrett, anything else that you want to add before we go? But I'm sure I'm going to have you back and we're going to talk about more things, because I'm sure by the time this is posted, things are going to change. Anything else that you want to add to the listeners about crypto regulations? Anything you want to direct them to?
Not in particular, no. I did find it funny when I was at Consensus, though. Out front, they had a McLaren parked there, and I sent a few pictures to my friends. And I was like, this is why people don't take crypto very seriously, is because we park incredibly expensive sports cars out
Wasn't
front.
it Waves? Wasn't it like that white?
It was orange and blue. They had one outside and they had one inside, and I was like, all right. Especially given the way the market was going, I thought, I was like, this was clearly planned out 6 months ago whenever the market was going gangbusters. And I think that I personally am looking forward to the certainty in the regulatory regime, because I think it'll bring a lot of maturity to the space that is not there. Cryptocurrency is not about crypto bros going out and just buying their Rolexes and buying their sports cars and things like that. And I dislike how it's really easy to frame it in that way, because there are so many people out there trying to develop technologies, even going back to Luna. And if you give a charitable opinion of what Do Kwon's mission was, it was to just bring stablecoin payments to effectively everyone in the world using a currency pegged to the US dollar, which is the world's reserve currency. I mean, from a charitable perspective like that, that's a world-changing goal for people who don't have access to capital. And I thought that was like really interesting and admirable if you look at it from that perspective. So I think that the maturity should bring out more of this is the type of technology that could really impact and improve the lives of people globally going forward. And we just got to get away from this whole crypto is all about just like degenerate gambling. Because right now, especially given the types of, the names of cryptocurrencies that did well last year, I can't even say them on this podcast. So it's just that kind of stuff is just like, we got to get away from that and more towards like the regulatory clarity and the maturity, which is what I'm looking forward to.
I so agree with you, and you're right. There are, of course, the side of the crypto bros, but there's also, you have to be aware of, I think me and Garrett are more of, we're the believers. We believe in this technology for what it can do, but you also have to be careful in this market because there's people who pretend like they're behind the technology when really they're just trying to get rich quick. So you have to be very weary of people, but it is very, very interesting. And, a lot of the market will change, in my opinion, with blockchain. And, you just have to do the research. Again, one thing you should check out is Web3 is growing great with Molly White, I believe. And she gives great resources and other side of crypto and of blockchains, so check that out. And till next time, Garrett, I'm so stoked. We're gonna thank you for being a guest on the Tea with B for part 2. And Garrett, our favorite crypto expert, will be back to talk about more things in the market. Thank you, Garrett.
Yeah, no problem. Thanks for having me.